Join the Ungovernables. No filters, no apologies. This season, we're cracking open Uniswap governance. Welcome to a new episode of the Ungovernable Podcast.
Welcome to a new episode of the Ungovernable Podcast. Today, we're joined by BP, a core contributor of Gamma Strategies. Gamma is a protocol for trading and active liquidity management, and also is a delegate for Uniswap and Optimism. I'm Austin from Alpha Growth, your premier DeFi operations and growth firm. BP, welcome. What else should the listeners know about you?
Thank you for having me. I'm BP from Gamma Strategies. I'm the founder, and we started Gamma Strategies about 3 years ago when Uniswap V3 went live, and we are one of the largest market makers on Uniswap V3, and we built a protocol on concentrated liquidity management. I'm currently the lead dev, the Solidity engineer at Gamma Strategies, and happy to be here and talk more about what we have in store and what we're building.
Likewise. Before we get into that, love to learn a little bit more about you. When was the first time you heard, Bitcoin or blockchain, and what was your first interaction with crypto itself?
Oh, okay. Yeah. So I first heard of crypto back, I don't think I was like super early to the crypto game. So I started hearing about it in 2018 when my sister got into it and she bought XRP and just started showing off how it was mooning and how I need to get into it. And at the beginning, I just thought it was sort of scammy. I don't know. I just didn't really get that much into it. And pretty much, so that's kind of how I first learned about it. And then in 2020 during COVID, I was working in investment banking at the time, and somebody introduced me to DeFi and farming, and that's what really got me hooked. I started watching these videos on YouTube called by Finematics, where he just kind of very clearly and explains how DeFi works, how yield farming works. And I got addicted then, and I just pretty much I would do my investment banking job for 100 hour weeks, and then every time in between I just look up DeFi stuff, and I'd embark on different farming. I started farming on this protocol called Alpha Homora way back in the day, and that's initially how I got involved. And ever since then, I did business development for a protocol called Visor Finance back in the day, or I was actually started off as a community manager. And then I got more and more involved. I did the business development, and that company eventually transitioned to Gamma Strategies. And I learned more of the engineering side of things and how to code in Solidity. And that's pretty much and here I am today, and I'm now leading the project and building more code on top of Uniswap V4. So that's pretty much how I initially got started.
I love to hear the story. It's I have a similar backstory in terms of going from traditional finance into hot DeFi summer, as well as my brother also orange pilling me, and it sounds like it was more of a blue pill for you.
Yeah.
I'm kind of curious, going from investment banking and it sounds like you learned Solidity. Did you have a background in the computer science or any sort of programming?
Not really.
Okay.
Yeah, I mean, I took AP Comp Sci back in high school, but that was pretty much it. And I did horribly on the AP test there. So pretty much zero background in computer science. I majored in business economics in undergrad, and then I did accounting for 2-3 years, and then I went back to school for law school. And then I was trying to be a lawyer, and I figured I didn't want to do that. I wanted to go into finance. And so then I became an investment banker. And really, I think it was just throughout this process, I was just figuring out what I didn't want to do. I knew I didn't want to do accounting. I knew I didn't want to do law. I knew I didn't want to, do traditional investment banking, just sort of that please fix lifestyle, working on slides, working on Excel spreadsheets and stuff like that really wasn't for me. And, once I discovered, crypto and DeFi, I was hooked. I think I just got really red pilled into it. I just couldn't, turn away from it. I, watched every video that I could on it on YouTube, and And then that eventually led me into like crypto zombies, where it's like a little crypto game where you could start learning Solidity. And then I did boot camp on Solidity. And then really, I think what really changed, really turned me into an engineer was really ChatGPT. Like for a lot of new engineers, I think just getting over that syntax is the hardest part. And a lot of people just kind of give up because there's just so much syntax involved, how to import things, how to write code, how to do a for loop and all these other things. But with ChatGPT, all that syntax just sort of got abstracted away. You could kind of, with natural language, just say, I want to do this. Please tell me how to do it. And, oftentimes it will be wrong, but, I think that process of interacting with ChatGPT, okay, this doesn't look right. Why isn't it working? Can you explain this part to me more in depth? Can you give me give me an outline technical explanation of how this works? And then it'll do it very cleanly. So that's kind of how I really learned how to code. And, there's a lot of people saying, vibe coding, and there's a lot of people kind of talk, like in a derogatory way about vibe coders, but I think it's just a really good way to learn. And it's not like you're asking ChatGPT to write the entire code for you. You're getting very good base understanding, especially if you're coming from a field where you didn't really know the technical ins and outs. Like, it can explain it for you much more in depth, and you can keep asking as many questions as you want and get the answers. And I think that's a fantastic way to learn, and it's pretty much how I learned.
I appreciate the honesty too, and coming from a data science background, it's definitely made things a lot easier rather than going to Stack Overflow and trying to solve the answer yourself.
Yeah.
You're spending hours and hours on one bug.
Right.
Can't find the source of it. So yeah, I imagine vibe coding is going to be, especially with the advancement of AI, is going to be more and more powerful over the coming years.
Right. The funny thing is, like, I notice a lot of people that have been in coding for many, many years. A lot of them are a little bit defensive when I talk about ChatGPT or Cursor or Claude or whatever AI tools that I'm using. But I think a lot of people just assume that once you use these tools, you're having it do everything for you. But I think quite the opposite is true. You learn to do more things yourself, but you just have this extra tool at hand where you could just keep asking questions and, just dive deeper than you ever would have dived before. Like, you could, go into the imports, go into the libraries and explain the libraries to me. It's just, you have all these tools at hand where you could just get a really deep understanding of what you're building. So I find quite the opposite is true. Like, some people say as vibe coders, you don't truly understand what you're building, but I think with all the AI tools, you could have a 10x better understanding. It just depends on what you're prompting it, what you're having it do, and how you're using it.
So for sure, if you were gonna, somebody relatively new to Solidity, what might be some resources or AI tools that you would point them towards to start, messing around and playing around with Solidity?
I always tell people, I think the best way to learn how to code is just to think of a simple project in mind first, and then something that you want to build. Like, I want to just deploy a token contract, for example. That's like one of the easiest things to build, and just try to build something from scratch that's very, very simple and have it more project based, and just kind of start broad. Say, okay, just grab a sample token contract, make some modifications to it, install, use Cursor or Claude or whatever AI tools that you have with you, and just say, here's a sample of what I want to build. I want to make this small adjustment to it. Help me build it. I want to use, I think it's just more of the tools that you want to use first. Like, okay, how am I going to deploy? What do I need to deploy this contract? Either hard hat, or most people use Foundry these days. Okay, so I want to deploy this contract using Foundry. Help me develop the Solidity code and help me develop the script to deploy it on the blockchain. And then just start broadly like that, and then it'll just give you it's going to spit out some cookie cutter code, and then you go deeper. Just, okay, you did this at the top, Pragma Solidity. What does that do? What does this version mean? What are you importing here? Why are you importing this? Why are you importing that? And then go into the imports and just kind of learn that. And I think that's kind of how I learned, just from the top down, and just literally asking every question that I had in the book, And I think with a normal tutor, they would have gotten so frustrated with me by all the questions I've been asking. But luckily, AI will just take all your stupid questions. So I think that's pretty much how I learned. And I think that's probably the best way to learn, through a project and just ask as many questions.
Yep. Yeah. And I think designing something and building your own project rather than just following steps, you're going to learn a lot more along the way.
Right.
So I want to now dive into Gamma a little bit, and maybe we could take a step back and pretend I'm a listener who's never, provided liquidity or created an LP before. Could you explain Gamma in like 60 seconds?
Yeah. So, okay, assuming you've never provided liquidity. So essentially, decentralized exchanges, anybody can provide liquidity. And what is liquidity? Liquidity are just tokens for trading. So if you're trading on Coinbase today and you want to buy ETH, right? You spend USD and then you get ETH in return. Well, who's providing the ETH for you to buy? It's usually some market maker out there that's providing the liquidity on the exchange for you to trade into. So you'll trade in your USD and you'll receive your ETH. Now, on a decentralized exchange, it kind of works the same way, except anybody can be a liquidity provider. And traditionally, what that's meant is that you'll have some random person or random people that are supplying ETH and USDC into a liquidity pool, and you as a trader can trade for either ETH or USDC by, let's say, if you want to buy ETH, you put USDC into the pool and you take ETH out of that pool. And so the liquidity provided by providing that ETH and USDC allowed that to happen. And so it started off very simple in Uniswap V2, where you just provide ETH and USDC 50-50 ratio, and then anybody can trade assets within that pool. Now with Uniswap V3, they added a layer of complexity to it, where you can not only just supply ETH and USDC, but you could supply it in any price range that you wanted. So I want to supply ETH and USDC only when the price is trading between $2,000 and $3,000. So if it goes below 2,000, I'm not providing. If it goes above 3,000, I'm not providing. But if it's trading between 2,000 and 3,000, then I'm providing liquidity for people to trade, and people can, swap assets into your liquidity position and out of it. So where Gamma came into play here is with that Uniswap V3 aspect, the fact that you can provide liquidity in any price range. And that's what we developed our first product out of, where we said, okay, it looks like we need some expertise here on which are the optimal ranges to provide liquidity. There's pros and cons to providing in a narrow price range versus a wider price range. You could potentially lose a lot of money by going too narrow, or you could potentially leave a lot of money on the table by going too wide. So we developed a protocol where we're optimally choosing which ranges to provide in. And as anybody that provides funds with us as the LP will receive the fees that we earn from providing that liquidity. So that's how Gamma was born. And that was like our very first product that took off and did fairly well. We partnered with other DEX, we partnered with Uniswap to incentivize our positions, because what we did very well was that we kept liquidity concentrated within specific price ranges. So it's always active within the price range, where a lot of people, when they're providing liquidity to Uniswap V3, they'll provide it from, let's say the ETH is trading at 2,500. They'll place liquidity at 24 to 2,600. But then the liquidity would quickly, the crypto markets are very volatile. It'll go below 2,300 and they're no longer providing liquidity. So it was not very good for Uniswap, because, if you're not providing in-range liquidity, it's no longer generating volumes. And so we were sort of the service provider that provided liquidity on behalf of the public to always keep that liquidity within range and sufficiently concentrated so that the traders have a better experience. But that's in a nutshell. I probably went over 60 seconds, but it's kind of a complicated topic. Yeah.
Yeah. No, I think maybe if I can put it simply too, is the initial reason was to help traders have liquidity, and those liquidity providers continue to stay in range, so that way they're not losing money and they're also not leaving fees on the table when traders are making those swaps.
Correct.
So how has, Gamma evolved? Because I think that was like the initial piece where you guys started, but how has Gamma evolved over the previous years?
Yeah, so I think we've definitely got a lot smarter with providing liquidity. I think we made the same mistake that a lot of people made in the very beginning, where we provide liquidity in extremely tight ranges. And the downside of that is the tighter your ranges, the more quickly you're selling off the better performing asset for the underperforming one. For example, let's say if ETH is absolutely mooning, right? And as soon as ETH gets to the top end of your range, you've ran out of ETH in your position. So you have only USDC in your position because everybody traded USDC into your position and took ETH out of your position. So you lost that upward exposure to ETH, and that's the so-called impermanent loss that many people in Uniswap or LPs on Uniswap have probably heard of, which is you lost exposure to the better performing asset. So what we've developed over time is we've developed a backtesting framework where we say, okay, now we have plenty of historical data, historical swap data. What if we experimented on on how we change the ranges, whether we go wider in terms of when there's a lot of volatile price action, we go narrower when there's less volatile price action. Price prediction mechanisms, like we take financial indicators to determine when volatility is likely to rise or when it's likely to go down, and we adjust our ranges accordingly. So that's a big part of how we evolved over the years, is just coming up with different strategies tailored to different market dynamics, so we don't lose too much money over time. And so that's kind of how we evolved our market making product. But we've also developed on Uniswap v4, which is when Uniswap v4 first came out, the main innovation behind it was that you can have any arbitrary logic before and after a pool event, like before or after a swap, before or after you provide liquidity. You could do any arbitrary logic on the blockchain. It's completely open-ended. And what we developed from that was, okay, providing liquidity on Uniswap v3, oftentimes if you're providing just a single asset, it acts as a limit order, because you could provide just single-sided ETH above the current price tick, and when ETH goes through that price, it will convert to USDC. So let's say ETH is trading at 2,500, and you put ETH liquidity at 26 to 2,700. When ETH goes all the way to 2,700, is completely converted to USDC. And so that was a project that we developed when we joined the Uniswap v4 incubator course by Atrium Foundation. The Uniswap Foundation sponsors that course, and being liquidity providers ourselves, we said, okay, this is Uniswap v4, something that we have to learn. And one of the big use cases, I think everyone's talking about, like on-chain limit order books these days. I think hyperliquids have been like in the news. A lot of people in the LP space are wondering, like, how come no one's built an on-chain limit order book that's completely decentralized? Uniswap v3 had that potential, but the only part that it was missing was that once it hits that price point, like that 2,700, if the price were to pull back, your USDC would convert back into ETH. So we needed a way for that, once it hits your price point, for that liquidity to be removed, so you have your liquidity position has been technically executed. And so we use v4 to add that mechanism in. So once it hits the price point that you want, we burn your liquidity position. So we've transitioned. We still have our market making product, and our plan is to combine the two products, because I think that's really going to tailor to both market makers and to retail users, to have a platform where you could trade effectively in the liquidity position, and also you could provide liquidity for your limit order book, and you'll have a great trading experience. That way you'll have deep liquidity books. So I think these two products are very well symbiotic in a way. So yeah, happy to take a breath there.
Yeah. No, I appreciate the detailed description there, and I'm quite curious. You definitely piqued the interest how you guys envision really bring these two products together, because from the outside, they look almost completely different.
Right. Well, I think a good way to kind of envision is sort of traditionally when you see limit order books, you wonder who's providing the liquidity there. Oftentimes, it's a market maker. A market maker is providing both the sell side liquidity and the buy side liquidity for users to trade, right? And so that product is similar to our very first product, a market making product, where you can manage liquidity. The liquidity gets you can manage liquidity for any liquidity pool, and you can concentrate it at certain peaks, at certain price points, and you provide a good environment for people to trade. Mostly I'm talking about putting liquidity around the current price tick. And once the liquidity is around the current price, you have very low price impact. It makes it easier for people to trade. So that's, I think, our first product. Our second product is more the market taker side, or if you want to buy or if you want to set limit orders for retail and you need an interface for that, that's really where the second product comes in, where you have like this limit order book that you could buy and sell into, take market trades, but you could also, as an individual, you could choose which price points that you want to sell your tokens at. And in the back end, you have the market making strategies at work, where users, like if the price were to go all the way to, let's say, up 50%, which is not uncommon in the crypto markets, what the market maker vaults will do is that they'll move the liquidity over to that new price point and continue to provide liquidity for people to trade in, on top of the limit order book. And so the limit order book is really just an interface and that mechanism for automatic execution, but together in tandem, they make for the best trading experience.
Gotcha. Okay, that's super interesting. So I got a couple questions. I wanted to,
Sure.
First congratulate you, because I think you're one of the top volume for V4 hooks on daily. Ask how the limit order book actually integrates V4, and maybe go into a little bit more of like a technical deep dive there, just even keeping it at a high level, like why V4, why couldn't it be another DEX or even V3?
Yeah. So that's a good question. So the reason why we did V4 is so you can automatically execute a limit order after a price point has been reached. So V4 has these it's known for hooks, where a hook is just any logic before and after a pool event. So let's say through an example, I want to sell ETH at $3,000. And so what you would do is you would provide liquidity, you would provide single side liquidity of ETH at 2,700. And so when the price reaches 2,700, you have that logic that says, okay, burn this liquidity position, and once it's fully converted to USDC. So that's the V4 part of it. We use the after swap hook. The after swap hook will check, was this price point reached? If yes, if the price point was reached, then burn the liquidity position, and then the user now has USDC. He completely sold his ETH for USDC. The reason we couldn't do this on, let's say, V3 or another AMM is that once that 2,700 price point was reached, the user would have to go into the interface and manually remove the liquidity. So there's no automatic execution factor there. But V4 with hooks, we say, okay, in the after swap hook, I want the after swap hook to burn this guy's liquidity position so that he'll have that USDC available for him. Otherwise, if the price were to go to 2,700 and then pull back to, let's say, 2,500 again, his liquidity position would actually convert back to ETH. It wouldn't have been executed at 2,700 point unless he actually physically pulled out the liquidity. So that's what Uniswap V4 allowed us to do, is to just provide that simple automated feature, which is exactly what a centralized exchange would do, except they have all these centralized entities that will and bots and keeper accounts that will do that. But this one, our hook is just deterministic. Once that price point is reached, it's going to get executed every single time. So in essence, I feel like V4 just makes these things like it's really a V4 product where it takes advantage of that after swap logic, and it's perfect for launching limit order books.
Oh yeah, especially I feel like on the EVM side where we've really lacked like a solid, limit order. Most of the time you're just
Right.
doing spot swaps. Like you could go over to Solana and use the limit orders there. But in terms of like the EVM side, like nothing that was executable in a way that you felt comfortable using,
Yeah.
where your platform really opens up that opportunity.
Right. In a transparent and I'll say deterministic way, because you could still technically place limit orders on, let's say, they have these things called requests for quotes. I think Uniswap also has it on their front end where you say, I want to buy at a certain price, but it's dependent on a market maker that will supply your fill. And it's kind of more of an off-chain centralized mechanism where they say, okay, we'll fulfill it now. Whereas this one is just completely transparent. A swap that comes in will fulfill that quote. As long as it hits the after swap quote price, it's going to execute. So in that respect, it's unique.
Yeah, well, and I feel like the request for quote really doesn't differentiate very much compared to like your centralized exchange and doing a limit order there.
Right.
How would you guys feel for your limit order books, and how would they differentiate compared to a centralized exchange?
Yeah, that's a good question. I think there's two big differences. The first is it's completely free. And when I say free, you still have to pay the gas costs, but it's completely free to place a limit order and to cancel a limit order. Whereas if you place it on a centralized exchange, I think even on Hyperliquid, for example, you have to pay a 0.04% maker fee. On Coinbase or elsewhere, you pay 0.04%, 0.03%, or 0.2% if you're a large whale making trades. On Gamma, it's completely free. You just say you need to pay the gas prices, which on L2 like Base or Optimism, it's going to be like fractions of a penny. But the thing is, you could place $1 million order and pay like 0.001 cent to place the order.
Wow.
And it's also free to cancel too. And the next benefit is once that position is about to get executed, users are swapping through that position and converting it to, let's say if it's ETH, it's converting it to USDC. You're also earning the swap fees that take place. So you could be most cases, you're going to be net profitable in that you're earning swap fees. You're not paying any of the trade fees that you would on a centralized exchange. And it's, completely free to make and cancel orders. I think those are the two main benefits. And it's also, we can't be paused either. It's completely on the blockchain, it's permissionless to use. So you don't need a KYC to, create an account or do anything. Just kind of connect the wallet and go, similar to, if you were to use Uniswap today. And once your order is placed, you can cancel it anytime you want. It's permissionless to make, permissionless to cancel. Yeah, all the benefits of DeFi go along with it.
I mean, that's incredible. Almost getting paid or potentially getting paid to make trades, which is quite different, especially if you look at a lot of spot trading for some of the more popular centralized exchanges where they're, taking a little bit more than they probably should when it comes to
right. Exactly.
Yeah,
exactly.
Yeah. So that's incredible to hear. When it comes to utilizing V4 and being on chain, like how do you balance like the functionality piece and security piece with also the user experience, right? A lot of these centralized exchanges, or even Hyperliquid, it's super, super seamless. And how do you guys balance that from a Gamma perspective?
From like a security perspective, in terms of, I think with Hyperliquid, a lot of it comes from leverage, right? So this is just spot trading for now. We're thinking of introducing leverage at a later point in time by integrating Euler vaults. I think that's probably a question. Yeah, that one is leverage management and how to do liquidations. That's definitely a different ballgame. But this one is a little bit more simplistic, where it's really just ensuring that the smart contract is working the way that it should. There's also gas cost considerations too, where when I mentioned how the positions are automatically executed, it's really the swapper that's paying to execute those positions, because in the after swap function, the swapper pays for the gas burn the liquidity position. So it's making that process as gas efficient for the swapper as possible. So if it's too gas heavy, then what will happen is that the DEX aggregators and other routers will not route as many volumes to you because it's too costly to trade through your pools. So what we did was in terms of the smart contract side of things, we made sure that that was as gas efficient as possible. We use, in terms of like the tick traversal logic, we're using tick bitmaps, which is a little bit complicated, but essentially it's very efficient tick traversal logic, very efficient gas burning logic, having as minimal state changes as possible when we're doing the execution of it. And in terms of like the smart contract security side of it, we got it audited twice. We had a grant from the Uniswap Foundation and also a grant from the Optimism Foundation to get this audited by both Guardian and Cantina. So in terms of security, it's really the smart contract security that we were the most concerned with, to make sure that these orders are executed as the way that they should. They're as gas efficient as possible. So that was really our focus there when it came to security.
And then from like a user experience, how do you make that stream? Because it feels like there's a lot in it, right? Like under the hood, there's a lot more going on than just a simple limit order. How do you make sure that you have like a pretty seamless user experience in terms of that and abstract a lot of that complexity?
Yeah. So, behind the scenes, like what's going on is the user is choosing like a certain tick, and a tick is like 1.0001 to some exponent power, and there's a lot of square root math that's going on. So we abstract a lot of that away. Like when a user goes onto Gamma today, when they choose a price point that they want, it's like a normal price that they'll see in USD terms. It's not going to be in, square root price terms and things like that. So we definitely abstracted all that uni tick math logic away for users. So when they go on and they look at the Gamma interface, the Gamma limit order interface, it's exactly what they would be used to on a centralized exchange. They'll see, okay, I can place an order at this price, I could put this amount, and I could create a limit order at this price. And then once they create the order, it kind of gives them that familiar interface. Okay, this is my price point. This is the price point at which it'll execute. With the added benefit is like there's a section for your fee revenues. Instead of you paying the fees and say, okay, I paid X amount of fees to create the order, you'll have a fee revenue section will show how much fees you've earned by placing this limit order. So that's the one difference. But yeah, in terms of the user experience, they should have a pretty much seamless type of interaction with it as they would on a centralized exchange or on Hyperliquid or elsewhere.
Okay. Well, yeah, I appreciate the run through there. You also mentioned the Uniswap Hook Incubator program. I'd love to hear your experience and what that was like.
Yeah, the incubator program is, I think it's great. I'm really glad that Uniswap Foundation is funding it and giving all these educational resources. It's really just kind of from beginning to end and through examples, just instructing how the architecture works, what are the main differences from Uni v3, understanding the tick math. So the tick math in Uniswap is probably the most unique part. It's probably one of the most forked parts of their smart contract code. It's the tick math is what supplies all the concentrated liquidity mechanisms, and it's really the true engine and power behind the capital efficiency of Uniswap is the tick math. So there's a complete lesson on how the tick math works, and then after that they go into different hook examples, how to use the after swap hook, before swap hook, when are these used. There's some before add liquidity events, after add liquidity events, the use cases for these things, the importance of gas efficiency, because once you're going into hooks, a lot of times it's the swapper that will pay for the additional logic overhead that you're implementing in these hooks. So being gas efficient becomes even more important. So there's a lesson entirely on that. And then at the end, you have your final project. You kind of get together with your team. You could do this individually or with a team and decide what project you guys want to build. And then at the end, they have people from the Arbitrum Foundation and various other projects like Eigenlayer who are helping sponsor and funding grants for these projects to be built using their infrastructure or their platforms. And yeah, that's pretty much it. And they also do a great job at connecting you with, if you need funding money, they'll connect you with VCs. If you need audit grants for, to help, flesh out your idea more and to get it audited, they'll provide that as well. So it's really packed with resources, in every particular way, mostly educational, but also financial. And they have a great source of resources there too. Like the DevRel team is there, like providing assistance to coders and clearing up anything that might be unclear with using their libraries and their base contracts and things like that. So it's really a phenomenal resource.
It sounds like it. I mean, from technological resources to just even connections, I think that's huge, because I think a lot of people don't realize that V4 hook projects do have a cold start problem, right? You can't just hook on to an existing liquidity pool and run with all that liquidity on Uniswap. You got to start from ground zero and still use that infrastructure.
Right. Yeah, definitely. Because each new hooked pool is essentially a brand new pool that technically segregates the liquidity. And I think the way that the Uniswap Foundation is trying to get around that is by helping build the infrastructure for routers and routing volumes through different hooks and hook discovery and things like that too. So I can tell they're putting a lot of effort into there. And when we first deployed these limit order hooks, I think a lot of that infrastructure is there already, where we were automatically connected with routers, and routers just immediately started routing volumes through our hooks. So in that respect, I think they did a really good job. I mean, of course, we could always have more routers and more volumes flowing through, but I think even what they did until now is pretty great.
Yeah, I mean, I feel like that's a huge benefit to have that volume from the word go. Where do you feel like, because V4 is still relatively new, it's not even a year old, or even barely not even 6 months old. Where do you feel like there needs to be more resources and more support in terms of V4 projects, so then that way they can hit the ground running as fast as possible? It sounds like there's a lot of great stuff already, and that's out there, like the Atrium Academy and the Uniswap Foundation or ETA. Where else do you feel like, okay, this was a little bit turbulent for us?
I guess I think they're already doing a lot of great work already. I think in terms of I think like things that you're doing right now is getting these hooks like exposure and getting them additional, because I think they provide a lot of value, but a lot of people are just not aware of what type of value that they're providing. So providing like sort of a marketing platform for these hooks. But I think they're starting to do a really good job of that. I mean, Swap is using Uniswap V4 hooks, and I think they're doing close to like 80 to 100 million in volumes a day with their product and integrating it with their lending vaults, being able to leverage, like I was playing around with Swap vaults, and like with $36 of liquidity, you could have, or $36 of inputted capital, you could have up to like $450 of liquidity just using your lending vault. Stuff like that is pretty phenomenal. So yeah, I think they're on the right track. Obviously, Rome wasn't built in a day, so you're not going to have it just, all of a sudden just get a lot of traction. But I think just continuing to highlight the success that some of these early projects are having, I think will help onboard a lot more people. But other than that, I think they're doing a phenomenal job. But yeah, just more exposure there, and I think more people will join.
For sure. Yeah, and I think one thing that I'm super excited about is like the cross-pollination that you mentioned, right? Now, if you're going to do perpetuals, being able to leverage Euler, so being able to have that composability, not just in DeFi, but on top of Uniswap, I think that's going to be super interesting on what's going to come.
Yeah, definitely. I think it can make perpetual trading a lot more interesting too, because you'll have a lot more volumes. I mean, you have a different way that you can leverage your positions. And the main difference here is that you could earn the swap fees. So a lot of those swap fees could offset the cost that you're paying for borrowing fees. If you want to go like, 100x long or something like that, typically it's quite expensive if you hold your position open for a while. But if you're, extremely concentrated and you're generating swap fees, a lot of that could pay for the borrowing costs for the keeping your perpetual position open. So I think there's a lot of potential there. It's a different infrastructure than what people are used to. When I tell people that you could actually make money by placing limit orders, they're like, well, how does that work? And so it's a lot of it is just kind of educating people on how it works. But I think we're getting there. I think we're also starting our own grants program too. Well, we got a fairly large grant from Arbitrum back in the day to kind of just use in whichever way we want to promote our traction on Arbitrum. And we're starting a program where any user provides liquidity who provides liquidity to our limit order book and earns fees, you'll get the same amount in fees in terms of our reward. So it makes it even more profitable to trade on our platform. So we're trying to do as much as we can to just educate people on how this works and what the benefits are, because we think it's quite a big benefit over what they're used to.
Yeah, it sounds like, and be sure to check that out. But it sounds like UniV4, the underlying story is max capital efficiency, whether it's rehypothecation, whether it's Euler swap, whether it's limit order hooks, making sure that the end user is making that money and not leaving money on the table.
Correct. Yeah, definitely.
I wanted to ask, because I think, when you go to Hook Rank and you're checking out all these different hooks, you see a lot of no-op hooks. Would you be able to explain what a no-op hook is and what
I'm probably not the best person because we don't have no-op hooks in our actual platform, but essentially what a no-op hook means is quite simply is just not to do an operation when certain things happen. For example, I was considering also using no-op hooks in our protocol as well, where essentially typically when you do a trade, and like where I see no-op hooks being used is when people have custom curves. Like what I mentioned earlier about with Uniswap tick math, you could provide liquidity in different ticks and you'll have like your own liquidity curve. But what you can do is not utilize that at all. So what a lot of people will do is use a no-op hook there, where when a user places a trade, don't route the liquidity through the typical Uniswap ticks, but instead we have like a reservoir of assets, route the assets through there instead. So a lot of times people use no-op hooks by saying, don't use a traditional Uniswap infrastructure, use these assets instead. And so that allows for a lot more customization. I think Euler Swap has like their own custom curves where they probably use some sort of no-op hook not to go through the Uniswap curves. I think Bunny also has that too, where Bunny has don't use this Uniswap tick math, or don't use their curves at all, but go through our own liquidity density function to provide liquidity. So I think in short, a no-op hook is just a way of saying don't use the Uniswap traditional infrastructure, use this customized infrastructure for more, custom integrations, more gas efficiency, or anything like that. It's really open-ended what it can do.
Gotcha. So it's just, okay, that makes sense why it's with the tick math. And I feel like you're the first person that actually brought up tick math, which is, I feel like, super, super important. So thank you for bringing that to my attention, because I think that's going to be some late night reading for me to dig into it a little bit more.
Yeah, it'll put you right to bed. I mean, there's just a lot of it. I think the way that tick math works is like it's a way of representing prices from 0 to infinity. And if you were to do that, like just using regular math, you're going to run out of gas, or you're going to run out of space, because you can't really represent infinity with normal numbers. But with tick math, it uses square root math and like nonlinear math. So you actually have a point where, positive 887,272 represents infinity. It's able to use some sort of like 2i to the 887th power is effectively infinity. So it's a way of trying to represent infinity with just like a regular number. And I think that was the ingenious part of tick math.
Okay, interesting. All right, I'm definitely gonna have to do a little bit of a deeper dive. I wanted to touch on governance, because I think it's super interesting that you guys are one of the few V4 hooks that is like a delegate in Uniswap governance. Can you tell us what was the rationale behind this decision? And do you think more V4 hook projects should have a voice in the DAO and start delegating, being a delegate for the DAO?
Yeah, I think the reason why we were selected as delegates is we're liquidity providers on Uniswap, and our interests are, I think, a lot of times in the delegate space in Uniswap, you don't really have that much representation from the actual users of Uniswap. Oftentimes you'll have, maybe VCs or people that are invested, but the LPs are a big part of the Uniswap ecosystem. They have a lot of capital invested, maybe not, they're not as invested in the equity, but they're kind of invested in like the liquidity that people use for trading. And so it was really to give the liquidity providers a voice in the delegation process, because the liquidity providers, I would say, is the backbone or the lifeblood of Uniswap. Without the liquidity providers, you wouldn't be able to have the capital efficiency. You wouldn't be able to have the volumes that Uniswap is known for. So I think a big reason why we were delegates is to give the liquidity providers a voice in governance. And yeah, I think that's really the main reason. And we voted on certain proposals. I think the latest one is incentivizing liquidity on V4, paying for infrastructure on V4, or paying user or incentivizing users to build on V4, build infrastructure around V4, and being builders in the space, you also have a in-depth knowledge of what infrastructure we need. So I think just being knowledgeable players in this space and knowing what you need, I think will make you a better delegate at the end of the day, because you'll know what will make Uniswap ultimately better. Because the more liquidity providers you can onboard, I think the better the product that Uniswap will be ultimately.
Yeah, I totally agree. It's the lifeblood, right? Like it's kind of like the users of a startup. Like it's great to have your investors. It's great to have people that are buying your token. But at the end of the day, you'll have those end users being that flow for the protocol. It makes it hard to continue to stick around.
Right. And, we gave a lot of valuable feedback to the Uniswap Foundation too, just in terms of what would help improve. Like we were also, I think they onboarded, for whatever reason, it's a company that does a lot of stats on LP programs. I think it starts with a G. It's on the tip of my tongue.
Gauntlet?
Gauntlet. Yeah, there you go. So, we worked with Gauntlet on previous LP programs, which pairs would be best for incentivization, how to evaluate the success of these programs too. It's, a lot of times what they were doing is looking at volumes market share, but a lot of times what's really important is the fees market share, how much fees the LPs are making, because volume is sort of a metric where you can kind of, it's kind of like profit, where it's very manipulable, where if you lower the fee tier, you can increase the volumes like crazy. But it's a harder thing to manipulate fees, right? Mm-hmm. Fees is more like revenues, which is much more difficult to manipulate than profit is. Profit, you could inflate, lower the costs or like move costs around, and you could somehow manipulate the profit. But fees is like something that's true. It's all the revenue that's coming in. You could drop your fee tier down to zero and get all the volumes, but is it really, are your liquidity providers actually making money? So, providing input on programs like that, and I think we really push for having fee market share as being a major stat within how they analyze which pools to incentivize. So it's like, I think having these sort of insights makes us also a better delegate too. So, I think it's, I forgot where I'm going with this.
No, I appreciate that. Yeah. Well, I think it's one of those things too, like, right, you see TVL as often a vanity metric. Right. Or like you're saying, volume's a vanity metric to easily influence. There's definitely different levers that you can make those things make the number go up.
Right. Especially with dynamic fees now on Uniswap V4, you can make the fees, 5% super high, or you could drop them all the way down to zero too. So there's a lot more customizability, but with that, it's hard to get the true metric these days.
Yep. Yeah, and I think it's also serves the best interest of the LPs, right? Like, you're looking at it as, are they making money? Right. If they are, great. If they're not, then okay, that's kind of a problem. We need to fix that.
Right.
I would love to hear, BP, a little bit of what changes you would like to see for an LP perspective, and what changes might need to be made, or improvements, or things that could be done to really improve LPs and help them have more of a voice in Uniswap DAO.
Oh, the Uniswap governance.
Yeah,
That's a good question.
hypothetically, or even if it.
So on the governance side of things, what could be improved on the LP side of things? Yeah, that's a good question. I think just there's a lot more LPs that are coming into this space. I think us, Bunny, and technically now Euler is now a big player in this space. A lot of builders are coming in. I think just in general, just having more builders get more delegation power, I think would be great, because I guess in one respect you could say, okay, maybe they might be more self-interested in things like that too. But in many other respects, like a lot of times the interests are aligned. Like they want to do something that'll get them more exposure, get them more swap volumes. And this is the same types of things that Uniswap wants as well. When it comes to these incentive programs, a lot of the dialogue is about getting more volumes, getting more hook volumes. So I think, especially where the interests are aligned, I think it's important to perhaps give these LPs a little bit more delegation power, give them more of a voice, and things like that. And maybe even in terms of when coming up with proposals, working together with either the foundation or elsewhere to see, okay, what do you guys need that will help get you guys more volumes, or should we invest more in infrastructure? Should we invest more in users? Should we invest more in marketing and things like that? I think those are some things that I think a lot of the LPs will have a lot of unique perspective and add a lot of value there.
Yeah, and I guess outside of governance, what would you want to see from Uniswap or even V4 projects that would make LPing radically better for the liquidity providers?
That's a good question. I think from a smart contract perspective, Uniswap was really smart in that they made V4 like open-ended, so that if you want to see an improvement to be made, go build it yourself. So they made it extremely open-ended. So I guess this question is not just for Uniswap, but it's also for me, and what can I build on top of Uniswap V4 that is something that I would want to see. I think in terms of, and I think we're still discovering these new use cases right now. So I think something that will help build, like, what are the big use cases of DEXs today? Like perpetuals are like huge, right? Borrowing, lending, some sort of a borrowing lending integration with the DEX interface. And I think Euler Swap is a great example of that. In terms of what they can build from the Uniswap V4 core perspective, maybe things with regards to gas efficiency. I know adding liquidity, burning liquidity is very expensive, and that's why a lot of people use custom curves, because if you want to add liquidity to a custom curve on Uniswap V4, a lot of times you're going to have to mint like a gajillion positions and then burn a gajillion positions. So that's why a lot of people use the no-up hook. So let's just bypass doing that. It's very good for our limit order hook, because we're in a single tick. We're just working with single ticks. We're adding a single tick and we're burning a single tick. But let's say if you wanted to add liquidity in a very elaborate curve, right? You're going to have to add liquidity to all those ticks. And then when you rebalance, burn liquidity from all those ticks, it's going to be extremely gas heavy to do so. So, they kind of already have the infrastructure to do that by just using a no-op hook, and then you create your own curve. But maybe if there was something on the Uniswap side that allowed somebody to create a shape, burn a shape, just like this with a snap of your fingers, using one smart contract call, like one modified liquidity call, that's extremely gas efficient. I think that could be something that a lot of people would find useful, and it would not prevent them from like having to do all the logic themselves, and like how to create a custom curve and things like that too. So I think that's potentially one improvement they can make.
I think that's huge too, as you were saying before, right? Like as more and more projects are trying to be capitally efficient, and moving, whether it's rehypothecation, just-in-time liquidity, to be able to do those things, you have to burn and mint those positions. And if you're doing it at rapid speed, you're passing a lot of cost on to possibly the end user. So
right, the swapper. It's mostly the swapper that has to pay for these things, or the liquidity provider. So it's that's why gas efficiency is such a big thing, and it's such a huge topic in the Uniswap hackathon too. So yeah.
Well, I appreciate that, BP. I have one last question. If you had one wish for the Uniswap ecosystem and let's say Gamma in the next 12 months, what would it be, and what needs to be there to make it happen?
One wish for the Uniswap ecosystem and for Gamma.
Yep.
I say my one wish is for Uniswap to flip all centralized exchange volumes from Binance to the Uniswap ecosystem. Have the vast majority of crypto trading take place on Uniswap versus any centralized exchange. And we hope to expedite that and make that happen.
I love it. Well, 2026, here we come.
Let's go.
Thank you, BP, for hopping on. I want to know, where can people best follow your work?
On Twitter or X, at Gamma Strategies is the best place to follow us on Twitter. And from there, you could get all our links to our Discord if you have any technical questions about our product. Twitter would probably be the best place. We have a great docs page as well, docs.gamma.xyz.
Thank you, BP. And that's a wrap of another episode of the Ungovernable Podcast. Thank you all for joining us today. And thank you, BP, for walking us through Gamma and sharing your perspective. For our listeners, don't forget to subscribe to us on Spotify and YouTube. We're dropping new episodes each week. Follow us on X at Grow Uniswap to stay updated. This was the Ungovernable Podcast. I'm Austin, and see you next week.
Thank you. Thanks for having me.
This was the Ungovernable Podcast by Alpha Growth. Watch all our episodes on YouTube or Spotify or weekly live on X.